studying your last two. I swim med tea when they turned in. The staring out to mute. And can lend a pole that Sunky died.
Schedule 14 is used to report certain miscellaneous payments made by a corporation to Canadian residents. Its purpose is to provide the Canada Revenue Agency with information about payments that may not be reported through other standard information slips. Think of a corporation making payments to different types of people. It may pay a freelancer for a project, a consultant for professional advice, an accountant or lawyer for specialized services, or another Canadian resident for work performed. Some of these payments may need to be disclosed to the CRA through Schedule 14. However, one important principle is that Schedule 14 is generally used only when the payment is not already being reported somewhere else. If a payment has already been reported on another CRA information slip, such as a T4, T4A, T5, or another required information return, you normally would not report the same payment again on Schedule 14. This helps prevent duplicate reporting while still ensuring that the CRA receives information about payments that might otherwise go unreported. It's also important to understand that Schedule 14 is primarily an information or disclosure schedule. It does not calculate income tax or create a new tax liability. Instead, it provides the CRA with additional information that helps verify income reporting by the people who receive these payments. The key takeaway is simple. Whenever your corporation makes a payment to a Canadian resident, first ask yourself whether that payment is already being reported on another CRA information slip. If it is, Schedule 14 is usually not required. If it isn't, then you should review the Schedule 14 reporting requirements to determine whether disclosure is necessary. By following this simple decision process, you can avoid duplicate reporting while ensuring that all required payments are properly disclosed to the CRA. One of the most important skills when working with Schedule 14 is knowing which payments belong on the schedule and which ones have already been reported through another CRA information slip. A simple decision process can make this much easier. Whenever a payment is made, ask one question first. Has this payment already been reported on another CRA information slip? If the answer is yes, then you generally do not report it again on Schedule 14. For example, employee salaries are normally reported on a T4. Dividends paid to shareholders are generally reported on a T5. Many contractor or service payments may already be reported on a T4A or another required information return. Reporting the same payment again on Schedule 14 could result in duplicate reporting. If the answer is no, then review the Schedule 14 requirements to determine whether the payment should be disclosed. Examples may include certain consulting fees, professional service payments to lawyers, accountants, engineers, or other Canadian residents, as well as other miscellaneous payments that are not captured by another CRA reporting slip. The key point is that Schedule 14 acts as a safety net. It helps ensure that payments which might otherwise go unreported are still disclosed to the CRA. It's also important not to make assumptions. Just because a payment was made to a Canadian resident doesn't automatically mean it belongs on Schedule 14. Likewise, don't assume that every consulting payment must be reported. Always verify whether another CRA information slip already applies before making that decision. A good habit is to follow the same decision process every time. First, identify the payment. Second, determine whether another CRA information slip has already reported it. If it has, don't report it again. If it hasn't, review the Schedule 14 rules carefully. The most important takeaway is simple. Every payment should be reported only once. Accurate reporting prevents duplicate filings, reduces confusion, and helps ensure that the corporation remains fully compliant with CRA reporting requirements. Completing Schedule 14 begins with reviewing the corporation's accounting records. Before preparing the schedule, your first objective is to identify payments made to Canadian residents that may require disclosure. Start by reviewing the general ledger, expense accounts, accounts payable, and payment records. Look for payments made to consultants, freelancers, professionals, contractors, or other Canadian residents. As you identify each payment, don't immediately assume it belongs on Schedule 14. Instead, ask one important question. Has this payment already been reported on another CRA information slip? For example, was it reported on a T4, T4A, T5, or another required information return? If the answer is yes, then you generally stop there because the payment has already been reported. If the answer is no, then review the Schedule 14 requirements to determine whether it should be included. Once you've identified the reportable payments, complete Schedule 14 using the appropriate payment details. After filing, keep all supporting documentation, including invoices, contracts, payment records, and any correspondence that explains the nature of the payment. Good documentation makes it much easier to respond if the CRA asks questions in the future. There are several common mistakes to avoid. One is reporting the same payment twice by including it on Schedule 14 after it has already been reported on another information slip. Another is overlooking consultant or professional service payments that may require disclosure. Some preparers also mistakenly report payroll payments again, even though they have already been reported on employee information slips. Poor documentation is another common issue that can create unnecessary problems during a CRA review. Before filing the corporate tax return, complete one final checklist. Confirm that you've reviewed all payments made to Canadian residents, determined whether another CRA reporting slip applies, identified which payments belong on Schedule 14, gathered the supporting documents, and verified that the schedule is complete and accurate. The key takeaway is that preparing Schedule 14 is usually straightforward. The real challenge is identifying which payments actually belong on the schedule. By following a consistent review process and checking whether payments have already been reported elsewhere, you can avoid duplicate reporting and ensure the corporation remains fully compliant with CRA requirements.